Hey, everybody. Welcome to Risk On, Risk Off. This is episode number 7, and I'm your host, Brian Hunt. Once again, it's another gorgeous day here in North Texas. I'm looking outside the window. I wish I was outside playing right now, but I'd rather be here with you, talking to my friends and my watchers to bring you the best and newest information on risk there is out there. So, as we all know, the show focuses heavily on risk with a tight touch on construction and real estate. And I thought this topic today be very interesting to sort of address, considering I think what we're all kind of seeing in the marketplace is that insurance is getting a lot more expensive these days. And give you an example, if any of you have by chance property right now in Florida that you're trying to insure, I feel for you very much so, because you're probably seeing some catastrophic insurance rates, not just commercial, residential, but commercial, or maybe just flat out you got carriers that are denying coverage. And we've all seen in the past 6-7 years, seemed to be an uptick in the frequency and severity of natural hazards, whether it be tornadoes in the Midwest, which we just saw, flooding, and hurricanes are attacking the Gulf Coast, especially Florida. And this year we saw a ton of snow in the West. That's going to probably bring results in flooding. It's going to happen down the road. Hail here in Texas, North Texas, can be an issue. And as a result, the carriers have been taking hits and taking the teeth. And so they're seeing, like this year, we're seeing 30% increases on average, if you're lucky, in a lot of occupancies, if you can get coverage. And a lot of those carriers are just flat out maybe denying coverage or capping the limits substantially. Maybe putting a 15% deductible on a hail, capping the limit, well below losses. It's tough out there. And there's really no indication to think it's going to get any better, especially with the change that we're having in shifting patterns in climate change. And as a result, the severity and frequency seems to get, like we talked about, the storms keep increasing. And it's going to be to the point, obviously, insurance companies are trying to make a profit. They're having a hard time making a profit, at least on the property lines, and something's got to give. And what I've been really, though, excited about in the past, say, 6-7 years, since my time working in the brokerage world, has been some innovation that's come to the forefront to try to bring solutions to the table that will try to, help clients and people alleviate that risk. And it's a great, with that technology innovation comes opportunities. And what we're seeing is new trends and new insurance methodologies come along that allow people to shift risks off their balance sheet, which is the past they haven't. And one of those is parametric. And parametric is a type of insurance policy where you're not using a legal contract necessarily to set transfer policies or get insurance in place. You're using large data, and you're placing put in a financial hedge. And the process is a lot cleaner with respects to claims. There's very little claims work that is done. And I can tell you that from back in my day, I was doing business interruption, property damage. That's very tedious and a lot of details. But parametric is a lot cleaner. And rather than me kind of ramble on it, I wanted to bring on one of my an individual who's got a lot of experience working in parametric, and I've known for a while. His name is Brian Thompson. And it's funny because I say Brian because this is probably, I think, my 4th or 5th person on this show who's been named Brian. It's not by scheme, or it just happens to happen that way, I guess, but Brian's hang out with a bunch of Brians. So it is a great opportunity to introduce you to Brian Thompson with Descartes Underwriting. Brian, welcome to the show.
Hey, Brian, thanks for having
me. Thanks for being with us. I appreciate you jumping on. And obviously, Brian, I'm very excited to talk to you about what's going on these days in the world of parametric. But before we can go down that road, I wanted to spend a little time to get to know about your background and how you got to where you are working with Descartes. But as I start each time, Brian, when I do these conversations, there's I like to ask the question, kind of like that old game you probably might be familiar with. Where in the world is Carmen Sandiego? So today, where in the world is Brian Thompson?
Yeah, so I am in Cabot, Arkansas, which is just right outside Little Rock. You can see the Razorback A back behind me right here. So, yep.
Very good. Now, are you from Arkansas originally?
I am. Yeah, born and raised. Been here for I guess my whole life. I've left a few times, but it keeps calling me back. So I've decided to stay this time.
And I believe you are a graduate of the University of Arkansas at Little Rock, correct?
I am. Yeah, finished up at UALR with a risk management degree.
Excellent. And so, how did you decide to get into risk management?
Kind of my standard joke on that is I wanted to play golf professionally, but I wasn't actually that good at it, so I got into insurance instead. Turns out I actually went back to college a little bit later in life. I was had worked at Disney World for a few years and was looking to finish up my degree and transition to a little bit different role. And
Okay.
really enjoyed the intro to property and casualty class as part of my general business, and loved that, and decided to switch majors, and here we are 10 years later. So,
well, Brian, when we get to the end, I always try to spend a little time talking to people about their, what they do beyond work. So we are going to circle back on Disney World, because my wife and I are big fans, and we will even do that trip by ourselves. So we will circle back on that.
Yeah.
So obviously, like you mentioned, you came out of University of Arkansas and you graduated. And so let's talk about your early stages of your career as far as getting into the world of insurance and risk management.
Man, yeah. So like I said, started with the RMI degree. Didn't really know necessarily what I wanted to do in insurance at that time. Had a relatively good baseline understanding. Actually wound up having a really good opportunity to open up an agency with Shelter Insurance. I don't believe they're in Texas, so I'm not sure if you're familiar with them. They're kind of a super regional version of similar to State Farm. Captive, heavy personal lines, things along those lines. But did that for just 5.5 years. They also owned a reinsurance carrier. And, something I had kind of fallen in love with the idea of reinsurance during my degree. Didn't know a whole lot about it beyond just the concept of it, but thought it was really interesting. And it was given the opportunity to move over to that, still within Shelter. So gave the agency back to them, went to the corporate office working for reinsurance, and did that for a little bit. And then, kind of my trajectory is a little bit different from most people. So like I said, did that for a little bit, and unfortunately loved the role of the company, but it was in Missouri. We had 2 small children, traveling a ton doing that, because there's not a whole lot of reinsurance being transacted in Columbia, Missouri, right?
Probably not. Yeah, probably not.
And just wanted to have a kind of a role back home and home more often as well. So took an opportunity to join Markel and move back to Arkansas. Like I said, it keeps calling me home. So came back and did that for 5.5 years. Loved every minute of it. Loved Markel. Wound up kind of running their retail distribution, agency management for what they call their Mid-South region. So all of our admitted products kind of rolled through me and my team of field reps. And really, like I said, enjoyed that. Nothing but great things to say about Markel. And just had the opportunity. I'd been aware of parametrics for quite a while through, cat bonds, and then just kind of seeing them more and more as the market evolved and the technology got better, and the ability to kind of do something a little bit different kind of came along. And like I said, I was aware of, Descartes is one of the industry leaders in that space, and the opportunity came up to join them. So I jumped on it and have been here, I guess, over 6 months, but loving every minute of it. And I think it's a fantastic time to be in this space and the alternative risk transfer. And, I know the hard property market is not fun for anybody, but I think it's great to be somebody who's saying, I have a solution, right?
Correct.
So
it's funny, and you probably know this as well, but I've said this throughout maybe a couple of shows. Insurance is very similar to construction. When I tell people it's a big industry, everybody knows each other.
Yes.
And don't be a jerk, because reputation is going to precede you. Because I would say that because I had about 4 individuals from Markel in our office yesterday.
Oh, okay.
So it's a big circle, and we're all kind of interact with each other.
I'm being ambushed right now, aren't I?
So, because I'm going to give you an example of like my background, how I came to know, or why parametric could be something of interest in construction, and then I'll turn it over to you to talk about maybe how you got into it. So, I had the pleasure of working for a very large general contractor in Dallas here called Austin Industries, a $3 billion general contractor. And I was kind of in between my stint at FM Global and moving on to Aon. And I got to learn, seeing and talking to people that, and hearing the stories about how, weather can definitely impact a construction project, and how that can have a significant impact to the financial lines, income statement. Because if you got to say the contract specifies it's got to be, say, provided and turned over to the owner by a certain time frame, and if you don't have enough weather accommodation days, then you're looking at cost overruns or per diems or whatever the case, or even penalties, liquefied damages on the backside. Or say an example, when I was working at FM talking to my clients, one big thing, like especially university, is let's say you're building a new dorm and the kids are moving in on an X date, and they got to be there on that X date. And if somehow some delays occurs because of too much weather, rain, snow, sleet, temperature, whatever, if that dorm's not open and students show up, someone's eating the cost as far as who's going to place that
Yeah.
apartments, hotels, transportation, food, whatever per diems is going to help get those kids accommodated until that dorm gets open. So there are financial implications if projects don't get done on term line, and not all of that is covered by insurance, or has been done by traditional insurance. And my last example, I'll tell you, like anybody who does construction and pouring concrete is critical, and during the critical path. And a couple of years ago, when they were building the SoFi Stadium for the Los Angeles Rams and the Chargers, it rained so much during one season. I guess during the course of construction, it rained so much that it impacted the core of the construction project. They'd lost an entire NFL season, delayed one season because of that. So that's when I first saw that. And then when I moved to my prior brokerage house, and see these stories about, all these issues, and talking to clients, how rain can be impacted. And so that's when I was starting to say, wow, I saw parametric was starting to come on. Like, wow, this makes a lot of sense. I think this is a solution that the industry would be well received to hear about. That's how I got to learn about parametric. And Brian, I'd be curious to know how you kind of got into it.
Yeah, absolutely. So, in my case, it kind of goes back to the reinsurance days, right? I was aware of parametric from cat bonds. Those came into play kind of mid 90s after Andrew, looking for capacity for the insurance industry. So that's what I knew of as parametric, was more of the cat bond type thing that really was only available to either large governmental entities, NGOs, multinational corporations, things like that. You really didn't see them or a parametric type project at a lower level. So I was aware of them. I knew what they were. And then what really kind of, I guess, got me reinterested in it and back on my radar kind of in the last, year or so, fortunately for me, it was actually Descartes that got me back interested. But, I love all the industry publications and things along those lines. And they have a pretty significant round of funding earlier last year. And that kind of made some news and made some headlines. And while I was reading an article on that, that was really the first time I had seen like, oh, okay, like this has dropped down to more of a retail level to where the individual consumer can get this. I mean, there's parametric companies that are doing residential work for and individual people, and then us, we're commercial focused. But that's really, I guess, the last year or two is when I really became aware of it being used much more, again, at the consumer level, the retail level, versus really only being available to these large entities.
Perfect. And so before I go on to my next question with you, Brian, anybody who's watching this program right now, please know if there's a question or comment you have, you can look at the bottom right-hand corner and add where it says add a comment. You're going to post that, and I'll see that, and I'll bring it up to Brian so you can see it as well. So, Brian, tell me, let's talk. You've been on insurance, and you've done the old school, the traditional methods, and you've seen claims. And let's start here there. So obviously, a traditional, your property and casualty, GL, your workers' comp, it's a legal contract between two parties. And these contracts are written by lawyers, and they look like it, and they're long, and they have all these terms, conditions, blah, blah, blah. And you have a claim. And it's that document is going to determine if a claim is paid. And if it's kind of gray, then you got to go to, precedent in insurance law, and hopefully that gets worked out. And I had a gentleman on here, Mark Gravely, who's an attorney, does design defect construction claims, and he made the comment to me on this program that insurance contracts are the most litigated type of transaction throughout the world. And I thought, like, wow, that makes a lot of sense, because it's like, sometimes it's gray. Is it covered? Is it not covered? What's that comma doing there? Should it be a comma or a colon? It gets very difficult. And when I was doing business interruption coverages, like, so a claim would be submitted for property damage and business interruption. A lot of times the carrier, the insurer sends it off to the carrier, and they've hired maybe a CPA to do the work, and the carrier would farm it out to a third party like me, a CPA firm, and we review it and cut through it, and then go back and forth, and there's phone calls and conversations back and forth. Is this really lost income or not? Can you prove it? What was your budget? Blah, blah, blah. It can be very long. Parametric is pretty cut and dry in the sense that, and I'll let you kind of explain examples, but you're taking data that you, the insured, and you, the insurance company, are looking at. You're doing the regression analysis. You're doing all the study of this data available to you. You're trying to come up with some sort of way to transfer that risk off your balance sheet, take it to the insurance company. They've got the data. You're all looking at it, and you're using the decision is use a third-party data set, whether it be weather station, rain collected by NOAA, hurricane tracking flights in and out of Orlando Airport, whatever the case may be, as long as it's publicly available. That's the data. And then when the triggers hit, you have a claim. And I know it can be, I'm kind of summarizing, but the two ways how the claims are done are substantially different. Am I right or right?
No, I mean, you're seriously right. I mean, you look at traditional insurance. I mean, at the core of that, you're going back to just agreements that were written in a tavern in London forever ago for ocean cargo, right? So, that's all of our modern insurance is kind of just led from that. And then, what we have is case law and everything else. It's just litigated events of if this covers or not. And then you've got 70 pages of exclusions and definitions. And, parametric, it's still a contract. I mean, it's still a legally binding contract with everybody, but there's no, exactly what you're getting at any point in time in the process. There is no, well, let's see what the adjuster says. How much was this really going to be? Did I prove this correctly? Am I subject to any of this? And I think that's where we really shine in that case, especially for more of the, esoteric risks or things that kind of fall on the edge or outside of traditional insurance policies, is that we do have, parametric insurance at its definition is it's pre-specified payouts based on triggering events, right? And then we clarify how we measure those triggering events. This on the web. My watch is talking to me over here. Sorry about that. You've got the Internet of Things is coming today, remote sensing technology, publicly available satellites, all of that data that we all have access to now that we can use to really define those triggers, measure those triggers, and clarify for everybody. So, a good example of that is, let's look at hail, right? We're looking at, North Texas, someone, maybe you've got a large, manufacturing risk that wanted to invest in a solar array to help offset some of their costs for that. So, we know exactly kind of where to start on that point, because typically the solar panels are going to have a warranty that says, hey, we're warranted up to 1.5 inches of hail. And so we know, okay, so we don't need to cover less than that. So we'll come in at 1.5 inches and above, but we also have all the satellite data, the remote sensing data. We can put sensors in the solar array that'll tell us not only just the size of the hailstone, the velocity of the hailstone, how many hits per square feet, all of that data that we can then use to build an index that says, okay, at 1.5 inches to 2 inches, you probably suffered about, based on all of this data, you should suffer about 30% loss to your panels. And so here's your limit, here's that. So we're able to build all of this together, but we know it, exactly what it is. The broker knows exactly what it is. The insurer knows exactly what it is. You all have access to the data. Correct. So at no point in time is there any uncertainty around what am I getting paid?
Yeah. No, exactly. Now, one thing this is obviously how pricing is done is different than, say, like other lines. Mm-hmm. And everything's based upon data and probability. And the one thing, and this is kind of a loaded question, I think I've even said this before. People say, "Oh, well, what does it cost?" And I go, "Well, it's really a question of what is it you're trying to retain and what are you trying to transfer?"
Well, it's the insurance answer. It depends.
Yeah, it depends. What do you want? I mean, but I go back. You can make it as cheap as you want, but the question is, this probably won't even hit. And so it's. I would say, correct me if I'm wrong, Brian. Maybe the one sort of kickback or issue people think about parametric is that maybe if you compare it to other types of insurance, it's a little more pricier. But I would also argue that, GL, workers' comp, auto, you have years and years of all this, and you have a sense of probability. But when you're looking at a lot of time historic, maybe natural events that you're trying to insure against, and especially if you're looking at it's kind of like it's part of like this is sort of taking off in maybe interest during a time when severity and frequency of storms have been increasing. So if you look at the recent data, you might be seeing more activity of a hurricane, Cat 3 or above, or 1 inch rain days. But it's also sometimes I would say the probability of these parametric events might be a little higher of hitting than, say, car wreck or whatever you're talking about. Because, and that's where I think it's like a trade-off, because it's, I'd say sometimes when maybe it's different, maybe Descartes you can say it different. Like if there's the question like rate online, mm-hmm. What percentage am I paying? Like it's a $1 million limit. How much am I paying? And I've seen parametric range anywhere from 1% to 10%, but a lot of it comes down to what is the data telling us as far as the probability of the event occurring. I mean, I mean, I know it's kind of maybe a loaded question, but do you want to try to take a crack at that one?
Yeah, no, and it's a great question, right? Because you got to look at it's not a one-to-one comparison, right? And I think anybody that's involved in parametric will tell you that. We're not a replacement for the traditional insurance market. And I specifically to me right now, obviously we're leading up to hurricane season. I think everyone involved in the industry is aware of the current situation going on in the Florida, named windstorm market. I mean, really just the Gulf market. That's specifically Florida is probably a little bit worse than most, but you've got that Atlantic hurricane season and the Gulf hurricane season approaching, and that wind market's kind of collapsed a little bit, right? But if you can find traditional wind, it's probably the better choice for you. Where parametric comes into play is when you can't find it, right? Or when you need extra capacity. Maybe you can find a little bit, but you can't find all of it.
Yeah, and I think that's where we're kind of hitting a lot of spots where traditional, let's say 5 years ago, maybe you didn't have an issue with your big name carriers providing, property coverage for a condo on the Gulf, the Florida Gulf Coast. I would say now, what you're probably seeing is that if you could find the coverage, dramatic reduction as far as limit on wind, dramatic limit on flood, higher deductibles. And so the point where I think that's what you're saying. Parametric, if you could find a good traditional insurance solution, then I think find it and use it. But then I think it's parametrics come into two parts. Parametric is coming in to provide a solution that a lot of the traditional markets are starting to walk away from or not doing, especially in the light of climate change. But then also it comes to a solution that flat out traditional insurance can't cover. And maybe you and I can kind of walk through an example of how this might work. Because let's say, and this I've seen this a lot, and I talked to a lot of my construction clients. So let's say you're a general contractor, you've got a brand new project, and you've got, based upon the contract and what the owner is trying to do with this building, let's say it's a tilt wall construction building, you got 12 months to build this thing. 12 months. Mm-hmm. Now, a lot of people might be listening to estimators. They're looking through. They push pull. They look at the schematics. They're trying to think about what's going to happen with the supply chain and subcontractors trying to get it. And getting this all to work on time is a dance. It's a kabuki dance, and it's also like black magic. There is a lot of art and there's a lot of science, a lot of art that comes into play for estimator and a firm to really nail a project, get it done on time. So a lot of things can happen in between. And sometimes what you'll have in a contract, you might say, you negotiate with the owner, hey, you're going to build in 10 rain day delays. So we'll say a cap is 1 inch of rain. If 1 inch of rain happens on a day, then you get a pass, and you get to add that day on the back end, like when you're supposed to complete it. But the owner might only give you 10 days.
Yeah.
And so then really, in that essence, what you've got is kind of like a 10-day 1 inch rain deductible built into your contract. But then the question is, okay, if it happens more than 1 10-day, 11, 12, up to say, 10 additional 1 inch rain days, now you're looking at cost overruns, per diems. You're figuring out, what am I going to do to try to get this thing across the finish line on time, going second shifts if you have to, going weekends. That's going to be additional costs, which maybe you didn't have built into your estimate, in which the owner ain't going to recut you a check. I don't care. I gave you a contract, build this building, get it done on time.
You bid this. This is what it costs. Yeah.
Hey, welcome to construction. So that kind of example, let's say that's this client, anyone out there, man, I really want to find a solution where I can put coverage for every day, 1 inch rain. Man, I know if I lose 1 day of building, whatever, blah, 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 it's going to cost, it's impact to my bottom line. Let's say $25,000 a day. Okay. Mm-hmm. So based upon that sort of parameters, let's kind of walk through what Descartes would be doing to try to find a solution for a client like that.
Yeah, right. So they're your client. They approach you like, hey, here's what I've got. Here's really the pain point that I'm dealing with right now, which is going to be, what if it rains more? I was only able to build in 10 days to this bid, and if I don't hit that, I'm starting to have some significant liquidated damages at the end of this contract. How can I solve this problem? Well, the traditional insurance market, you really can't, right? You don't have a solution for that. Where we can come in is, again, this kind of falls into that non-damage business interruption. I know this is probably maybe gray in the area under the definition of this interruption, but realistically, you're being interrupted because of the rain, right?
Yeah.
And traditional indemnity insurance for business interruption to trigger, you have to have suffered a physical damage. I think we all, and again, in the insurance industry, saw the litigation with COVID and, was the virus physical, whatever. So we'll move that aside. We're going to stay on weather perils. We're going to shove that to the side. But in this case, so, all right, you have your 10 days, day 11 hits. At that point, you can't work. If it's, you got 2 inches of rain that day, which is crazy, say 1.5 inches of rain that day, you're able to you have to shut the site down. You can't proceed because you're still working on dirt. Your job site's soup at this point, right? Mm-hmm. So what we can do is we can build a cover. You say, okay, how much do you need per day? Either we can look at that from approaching, what is your liquidated damages cost per day if you're over, or alternatively, what is your payroll cost? And can we help you recoup some of your payroll to pay overtime or things like that to get back on track?
Brian, I don't want to interrupt you, but I think you just nailed on a very key point. I want everyone who's in construction to understand and listen to what you just said. And I tell this to my clients all the time. In the United States, you cannot get insurance coverage for liquefied damages because it's basically telling you, hey, we're not going to insure if you're doing stupid stuff. But sometimes, as a result of the contract, these cost overruns, you have these overruns as a result of rain that impacts the project. Therefore, you have liquefied damages. Parametric can help provide you to get reimbursed or cover those costs that you're going to get hit, which could include liquefied damages. Even though you're not getting coverage for liquefied damage, you're getting coverage to offset potential liquefied damage due to rain. Is that a good way to say that?
Yeah, that's a fantastic way to say it. I think there's definitely a differentiation of, if you're just late because you're late, man, I'm sorry. Like, that's unfortunate, but I'm sorry. But if you're late because of things outside your control that are weather related, typically, again, parametric, I think, does shine very heavily in weather. Descartes, personally, we are focused on natural weather perils. So in our case, it'd be rain, excess heat. If you can, especially in Florida, you're running into August and it's 120 heat index and you just got to shut down for safety, right? Or if you're in the Northeast and, man, you didn't get the groundwork done in time, a cold front, it got too cold and now you can't dig because the site's frozen or too much snow or whatever, right? I mean, snow and rain, similar concepts, it's just different on how it falls. But so all that, yes, we can cover and we can help you recoup from that. Where you didn't do anything wrong. It wasn't just a lack of management or whatever reasons led you to be delayed. It was something that was out of your control. So in that case, you can cede that risk to us. You can let us. And I think a good way to look at parametric is we're more balance sheet protection in a lot of cases. Not every case, but in a lot of cases, especially non-damage BI, we're much more of a balance sheet liquidity cash flow type solution, right? So again, either hey, you're looking, we had, say you want to come to me, you're like, look, I don't think 10 is enough. I think, I want to make sure if we go 20, 30, whatever rain days that I have cover for that. So we can provide a structure to where, okay, at maybe a 1/2 inch, you start getting impacted a little bit. And so, maybe your daily rate is like, I think you said $25,000. So maybe at a 1/2 inch of rain, we only give you 17.5 or 10.5 or whatever, 12.5 or whatever that 12.5 would be the right number. Yeah. So, but because you're probably a little impacted, but maybe not completely shut down. And then at 1 inch or more, you're completely shut down. And so we can kind of structure that index and those parameters, right? That's where parametric comes from, to what those triggering events are based on really how you feel your impact is going to be from that weather event. And that gives you, again, either covering liquidated damages at the end of the contract, or we're able to provide capital as you go. So you can pay overtime, you can bring in extra people, you can kind of get caught back up, right? And so, and I think the great thing about, again, parametric is we build these individually to every single risk. It's not here's our contract, take it or leave it. It's what do you need? What works for you? Is this contract 12 months? Is this contract 8 months? Is it contract 16 months? I mean, again, it's you. It's what you need.
And I think I found to be very attractive regarding this solution is that the fact that it is highly customizable or bespoke, as the people in London would like to say.
It just sounds nice, right? It's fancy when you say bespoke.
It's so
bespoke solution.
It's so fancy. So, like an example, like I'll give you, like, we'll go beyond even my experience in construction. At my prior firm, I had known of 3 specific. Well, actually, this was a white paper too that people could go out and search and find this. There was a pipeline construction firm that was doing a project in West Virginia. And the CFO on that situation was at least a motivated buyer because he had been on a project before at his old firm, building a pipeline, rained so damn much, project just took a hit. The P&L, I mean, the profit and loss on the project and the result, the balance sheet for the firm took a hit. So he knew that, he'd like to have some sort of way to smooth out his income or protect his project. And so on a pipeline, the big issue is, day here, day of rain. When you get a big, what they call saturation, like 3 inches of rain in 5 days, where the ground is just soaked, it's mud, you can't move it. You're losing days, demobilization. Every day you're losing a lot of money. So in that situation, we worked with the client, and we basically had 2 solutions we came up with. Both coming out to be a cost about $100 or $150 each. So they spent $250,000 insurance with the potential to try to get like a coverage. Each one of the 2 had a separate limit, but it was trying to find some sort of coverage to help smooth out the P&L something went wrong. Well, in this situation, they got the rain did come, and one of the placements did trigger. So one of them, not both, but one. So in this situation, the CFO made the decision to buy the coverage, spent $250 on the 2 coverages, but one hit, and so the one hit came in with a $1.2 million payout. So spent roughly $250,000 insurance, got the 1.2, got $1 million to immediately go to his company to pay out to smooth out his income statement. And that kind of money, the owner was going to give it back to him. So in that situation, it's like it worked perfectly. So it's like, and I always talk to people, when they questions, they go, so have you any claims on it? And I say, well, at least I could tell you this had claims, because why pay for something that's not going to work? And another one we talked about before that was involved with, it was a company that was responsible for barge management, transportation. They run barges up and down the Mississippi River.
Yeah.
And we saw this in Europe this year. You think about why do I need insurance for that? Well, if the water's too high or the water's too low, the barge can't operate. So you're losing money. And in that situation, there was enough fluctuation on both sides of the Mississippi River. This barge operator got a payout. Didn't have to prove it by income statement or all that kind of stuff. He had the trigger. We had the mechanism. It was the contract. Boom, had a payout. And if anybody, like I saw, notice in Europe this year, the rivers dried up in Europe this year. So a lot of transportation is done up and down those rivers in Europe, and there was impact for that, I guarantee.
Yeah, I mean, you saw it in the U.S. this year. I mean, the Mississippi basically dried up towards the end of last year, right? And so, that doesn't happen very often. So that river level volatility absolutely is a concern. And again, that's something where, the barge operators, things like that, yeah, they suffered a loss from that, but they wasn't by damage. So their traditional product is not going to cover that. So where parametric can come in is, that barge operator or the port or whoever comes to us says, hey, we get impacted if the river at this gauge, because they all have a certain gauge they use. Yes, they have multiple gauges, but typically there's always like one big gauge that barge operator uses to drive. So, if it's too low, at a certain point, yeah, they can start, they're only running half loads because of their depth or draft, things like that. So we can start covering then. Maybe you don't need a full 100% of your daily limit that you asked for, but you're still being impacted. So we can, cover 25% of the daily limit. And then as it gets a little bit lower, we can cover 50 and 75 and 100 to where, hey, if the river's so low, we can't run barges at all, right? We don't have that channel is completely, just too shallow. Or the alternative is that, hey, the river is too high. There's too much water coming down it. We can't get underneath these bridges, or alternative, we can do it, but we're burning a ton more fuel than anticipated to try to do this. And so again, we can set these parameters in kind of a high, low margin to where you start getting covered for that economic loss for you. And I think I want to kind of touch on something else real fast. Sure. You don't have to be a barge operator, right? And I think that's, again, another way where we're a little bit different is we don't have to have that insurable interest concept, which I think is so strong in traditional indemnity and insurance. We don't have to have. So let's just say you're a manufacturer. You don't do anything with the river directly, right? You're just a manufacturer in South Mississippi, but the vast majority of your raw materials come to you through river traffic because it is, I think, the cheapest way to transport goods. And so you're going to be significantly impacted in your margin and your bottom lines by what happens on that river. So if the barge traffic isn't able to, say you're buying steel from Ohio or whatever, and it's coming out through barge traffic, you can't do that anymore, or you're doing it at a much lower rate. You're gonna be impacted by that. So you also can buy a cover based on what the river's doing, even though you're not operating barges directly on the river, but it has an economic investment to you, and you're going to have an economic loss based on what happens on that river. And so, you need to pay to have it shipped by rail or truck, or you're just going to slow down as you're waiting on half loads or quarter loads to come to you. And so that, again, that's something we can cover that you can't get elsewhere.
Yeah. And Brian, I think what that's another point on which I really found fascinating about this because it goes back to my days when I was at FM Global. I was traveling the country and the world, talking to my clients. We were talking about business interruption before it was cool. We're as far as supply chain disruption before it was cool. Yeah. And we were always asking what's, try to find out where they're, holistically from an enterprise risk management, where's their exposures and help identify and quantify that. And, a lot of times traditional property damage wouldn't cover some of these things. You could be dependent upon the supplier coming out of Thailand, or shifting weather patterns that impact your ability to get crop. I mean, these are things you can't necessarily insure, but it is like if you can't get enough corn in, then you can't produce, or you can't feed your cattle, then that's an issue. Or if the flooding is too much that impacts a grove that you're hoping to get your, tangerines or your cranberries from. I mean, that's kind of like, it's the daisy chain impact, which I think people, you think about what's going on in every scene in this environment. We're talking about, polycrisis sort of environment where there's so many threats or concerns that people are having to deal with, Russian invasion, the Russian invasion of Ukraine, and how that impacted, potash and steel and a lot of the supply chain we've been seeing the past couple of years. Issues that might pop up with China, in Taiwan, but then you just see all the weather patterns and fluctuations. If you can't move product up and down the Mississippi, then like to your point, your manufacturing, what do you do when your supply chain is cut in half? And that's, if it's directly attributable to, like, say, river and rain as an impact, when you can place a coverage on the Mississippi to help provide that insurance. And that's, so I think it helps people come up with a solution that, again, traditional insurance couldn't provide. And with the age of big data and technology and AI, now these sort of options are now getting more available to people, which they weren't available, say, 10 years ago.
Yeah, I mean, really even 5 years ago, right? I mean, I think that's a good way to put it is if, again, specific to Descartes, we are weather and natural cat focused. So, earthquake, wildfire, and then basically weather perils. Now that runs the gamut on what that is, but realistically, with just parametric as a whole, you come to me like, hey, this is what keeps me up at night. This is my pain point. How can I solve this? I can't get it elsewhere. What can you do for me? As long as it's something that can be measurable. And I think a good example of that is, again, in the parametric space, a little bit smaller. You see that with, flight delay. There's I think Blink, I believe is who it is. Yep. They're doing that. Like if your flight's delayed more than 30 minutes or your luggage is delayed more than 30 minutes, you get automatic payout because they're able to track that. They can build these triggers in place that you're buying it as you book your flight. You click yes, and then now you've got, $100 or a relatively small limit for, if your flight was, or your luggage was delayed 30 minutes or an hour or whatever the parameters are. So again, it's, we focus on weather, but it doesn't have to be. No. There's solutions out there for which, again, I mean, Descartes is launching for cyber as well, along those lines in the European market, and then other companies are doing that. And you've got some that are doing it through payment processing. If there's an interruption where you're seeing less swipes on the credit card or in your processor, then there's coverage available for that. Because again, can you get measurable data? Can we vet it and correlate it to an event? And then if so, we can probably build something around it for you to help alleviate whatever that concern or whatever that risk is for you.
Yeah. And I think to the point, like I know it's been done in the past, like say we're talking about, again, weather, snow. I do know something that's been used over the years has been like the ski resorts. Yeah. I mean, ski resorts have a direct, if they didn't snow enough, we're out of money.
Or too much. Look at Arrowhead right now. Like, I mean, the snowpack was literally over the top of their lifts in some cases.
Yeah, exactly. So there's an impact if it's too high or it's too low.
Yeah.
And so, that's a direct correlation to their business model, and that's a direct correlation to their income statement. And so, I just think it allows, as things get more and more, like say, more data is available. And I think you and I had this conversation, how, like, say, let's say you were your old employer at Disney World or Universal Studios, and that, you have a direct correlation, like say, if there's not if there's a significant drop off in flights and landings at Orlando International Airport, and that's to be a direct correlation. Like, let's say like that's a pandemic sort of scenario. You're not getting insurance for a pandemic, but you're getting insurance if Orlando International and Tampa has a dramatic drop off in flights, landings. Then there should be a direct correlation to the respects to the revenue at the front gate. Therefore, they can probably get coverage for that. There's enough data to, if that's something you wanted to model. I mean, that's sort of like if A plus B equals C. If A happens, then B happens, and C is your income. And if you got data on A, you're good to go.
Yeah, and like I said, again, we focus on climate, and I think a great way to phrase this too is with parametric, especially in our case. Like, let's say we're looking at a hotel on the coast of the Panhandle of Florida or Mississippi or wherever, right? They're on their coastal coast, and so that hotel's probably going to be relatively hardened. Maybe they feel fine that, hey, like, we're not going to be impacted by a Cat 2, like physically. But they're going to start having canceled reservations. People are going to choose not to come because they see that as the National Hurricane Center gives them that little cone of damage and their vacation points right in the middle of that, they're going to be like, yeah, we're good. We're going to stay home, right? And so those entities are losing income based on that. So even though they may not suffer a physical damage from that, we underwrite the probability of the peril occurring, not the structure. And so we're able to give them indemnity for that economic loss along with that, even though they may not have suffered any physical loss except for some trees and landscaping and a beach chair that wasn't put up right, it blew off or something, right? So like we're able to kind of again recover those economic loss. Or I think a good one recently was going to look at some ports for similar thing. They weren't really worried about the actual physical damages to their structures from the Cat. They were worried the lost revenue from a hurricane coming through. They're losing all of these. It was a more of like a yacht marina type port than like a cargo port, but they were worried about the docking fees, the storage fees, all that from their boats, and then an increased cost of tying down what is there, relocating what's there, so they're not getting slippage fees for that. So again, something that you can't capture anywhere else, but we can because we have the data for it. We can correlate it with that. Okay, if we know if you get projected into space, you're going to have this much of a drop in revenue. Yeah. So we can start covering that. And I think that's where again, the Internet of Things and just the data granularity that we can get these days is tremendous.
That's awesome. Brian, this has been very informative. So before we wrap it up, again, I'll remind everybody, if you're watching this and there's a question you want to have for somebody, please go ahead and type it and send it over. But Brian is kind of like trying to wrap up these interviews and like get a little behind. Let's get behind the person. So Brian, when you're not working, what are you doing?
Man, so my role has me traveling a fair bit, and so when I'm home, I want to spend as much time as I've got two kids. I got two boys. Yeah. They're 9 and 11. They're amazing. That's actually my 11-year-old. That's his guitar, not mine. I am. Okay. I have zero musical ability whatsoever. I get asked that all the time. Like, oh, what's the guitar? I'm like, no, it's my kids. Yeah. I don't know. But so spend as much as I can with them. I love Razorback athletics, baseball, basketball, football. So that kind of run the gamut there with all of that. But then I have some land outside there, so outside as much as possible. Arkansas is a beautiful state as far as mountain biking, hiking, going to the lake. We got a boat on Goose Ferry Lake. Go out there. It's just again, I try to spend as much time as possible with my family, with my kids, like out in our gorgeous state that I live in. I'm going to plug Arkansas. I'm sorry, I feel like I'm in like a chamber of commerce sometimes for the state because it is I feel like underappreciated in the national psyche there.
Well, I have to agree with you because my family, when we lived in Irving when I was growing up, my father, we used to go up to Branson, Missouri. We used to go to Branson before it was cool, Table Rock Lake. So now it's the very hot spot these days. It's been a while from I've heard, obviously with the Waltons, they've done an amazing job as far as developing Pacific Northwest Arkansas, and it's supposedly got phenomenal outdoor trails like for biking and things of that nature. So it's I definitely, from aesthetically, it is a very pretty part of the country. There's no doubt about that.
Yeah, no, that's the thing. And again, you mentioned Disney earlier. Obviously, yes. I worked there for 3 years. I did an internship, loved it, stayed for a couple more years, met my wife there, so I get to have probably like everyone here's going to groan a little bit, but I have my Disney princess, right? We met as important. I was like, oh my god, that's terrible. Yeah. But it's awesome. So with us, we're actually planning a vacation again this October. We tend to go every couple of years.
Okay. So what's your secrets respects? So you've been there, you've worked there, you're thinking about a trip. What are your kind of your secrets or tips for when it comes to Disney World?
It's phenomenal during Christmas, right? But I will say the Christmas decorations last for a while. Do not ever go the week between Christmas and New Year. That is the busiest time of the year for that park. and you will be miserable.
Yeah.
It's gorgeous because, I mean, it's very pretty. It's gorgeous. You'll be miserable and hate yourself. Find any other time of the year to go. I recommend February because that seems to be the slowest time. Take a jacket. I realize it's Florida, but Florida does have a winter. It lasts 1 week. Sometimes we get December, February. It's going to happen.
Yeah.
You know.
Yeah. Now I've been there. We've done the Disneyland. I mean, like actually, I was traveling quite a bit. I was at FM, and like kind of my girls at the time were the same, like kind of like you know, 3 years difference. And the benefit was like the mileage and the hotels. I was able to eat the airports, and so we did Disney World, Disneyland, and then we've done it multiple times. And now we got to the point where my wife and I we like to go. We'll go by ourselves. Like Food and Wine Festival, which is always
Food and Wine, and Food and Wine runs like all year long at this point.
Pretty much.
Right? So we're going in October, and we've always gone in October strictly because Food and Wine Festival is absolutely amazing. Love Epcot, can spend every day there and never get tired of it. So I drove the rescue boats, and I managed recreation. So like I had kind of the coolest job you could possibly have at Disney. That but I want to you mentioned kind of traveling. You guys go to the parks. So Descartes is a French MGU. We are based out of Paris. So one of my plans next time we go over for our team meeting is I'm going to take a couple of days and go to Euro Disney Paris.
Oh, interesting.
Just to check that box off. So I've decided I want a goal of visiting all the parks at some point. We'll see how that happens. But
that's I like it. I like it. It's like a good, because they have different rides at different parts of the country. You can't get back to the United States. So exactly. Awesome. Hey, Brian, thank you so much for your time. This has been highly informative. So everybody who's obviously can find you on LinkedIn, and you're based in Little Rock and Descartes. Any question respects to parametric, feel free to send them directly to Brian Thompson. You can find him on LinkedIn. So, Brian, thank you so much for your time.
Oh man, my pleasure. Really enjoyed it. Always fun hanging out with you.
Yvette, thank you, sir. All right, so that has been another episode respects to risk and the tangent, and this we talked about parametric. It's obviously one of these things I would say it's a new solution, but the way the economy has been changing and weather patterns have been changing and different risks pop up, being on top of new solutions is sort of like the key to make sure that you're truly looking out for your operations and your firm, and not only that, yourself, because risk is evolving. You never know what the next big threat's going to be. But the one thing I like about insurance, what I've been involved with, is that when something pops up or some new threat evolves, typically insurance is one of the first things to try to come up and provide that solution. So as always, I hope you found this informative. You'll be able to find this video along with the other risk on, risk offs on my YouTube channel. If there is by chance an in-topic or individual you'd like to see on this, please let me know. Or if you'd like to be on it, reach out to me. And you can also, if you wish to find my newsletters, Risk It All, here on LinkedIn and also on Substack, and all the video appropriate links you can find on Twitter. Until next time, guys.